We've seen a nice reversal in the dollar-CAD pair over recent weeks. This is a pair that had been pushing the 133.50s, and we'd seen a strong attempt to try and break through that key resistance area around 133.50, 134. This area coincided as well with that 61.8 fib level from the most recent highs to the most recent lows. In terms of what's really spurred this reversal, it could be a number of factors, one of which could be the fact that we have seen a bit of a return of risk appetite, this risk aversion that we've seen in the markets over the last couple of months, which has coincided again with the drop-off in stock markets, has been supportive for the US dollar. Whether that's because it's seen as being the biggest beneficiary of any trade war, even though everyone loses, or whether it's because the US Treasuries are seen as a more attractive safe haven because of the yield that is on offer, it's not really important. The US dollar has been acting as a safe haven. So the fact that we've seen this reverse in this risk appetite has pulled some of the attention away from the US dollar, seen it soften a little bit, which has helped to pull this particular pair off its highs. We've also seen the Bank of Canada, of course, is still, it seems, a little bit away from cutting interest rates. One of the few central banks around the world that has signalled that it's not quite ready to be cutting interest rates at this moment in time. Plenty of positives still to be seen in the economy. And of course, in more recent days, we've also seen a little bit of a bounce in oil, and with a correlation between the Canadian dollar and oil has been very prevalent. In the last 24 hours alone, we've seen inventory data which has shown a bigger drawdown than markets were expecting, a much bigger drawdown actually than markets were expecting, has lifted oil. Oil did suffer a little bit of a decline following the resignation of John Bolton, the National Security Advisor to the White House, someone who's seen as more of a hawk towards Iran in particular, and the removal of which could potentially see negotiations resume between the two regimes. If that leads to the removal of sanctions, of course, then that would bring a lot more oil on the market, which is why in the immediate aftermath of this announcement we did see oil initially drop. But again, like I say, those declines were immediately unwound as a result of those inventory figures. The higher oil prices go, the more beneficial it is for the Canadian dollar. And again, this is one of the things which is contributing to the fact that we've seen that reversal eventually off the 61.8 fib. It did look uncertain for a while because we were seeing so many repeated tests on those levels, but I think a culmination of these three factors really did break that support, and since then we have seen quite an aggressive move lower. In terms of where we go from here, we're trading currently around the 130, 150s. The key level below is, of course, 130. Not only is it a big psychological level, but it is also the most, coincides as well with the most recent low. If we do see a return to the upside, then again, 133.50 still remains key, but momentum does very much seem to have been regained by the bears at this moment in time.